Let me welcome on board Sudip Bandyopadhyay as well and find out what he's making of the market. Sudip, hi, afternoon. FIIs finally make a comeback. Crude continues to be sedate. Seems like all things going well, and I guess that was, only a validation when we did hit that all-time high, or a fresh high rather, just yesterday.
Yeah, absolutely right. I think, things are going right as things stand for the capital markets. And with US interest rates expected to come down in the near future, crude oil doing what they are doing and coming down and hovering around 72 levels, monsoon being good, Indian economic indicators, macro indicators, all being good. I think all this augurs very well for domestic capital markets. We also, on top of all this, we have to remember that the strong domestic inflows, about 50,000 crores per month, 25,000 coming through SIPs itself, and balanced through multiple other channels, including HNI money, insurance, individual putting money. So I think it's a formidable combination. And on top of that, when you have FII moods changing and risk on mood coming back, we have a recipe for a perfect market. And we are witnessing that once in a while. One has to remember that at such high levels and the pace at which we have gone up, bit of correction, bit of profit taking is coming. But that's par for the course, and it's good for the health of the market that we, at every level, we are consolidating for some time before moving up.
Consolidation is fine, Sudip, but if you're a long-term investor, do you think there is a need to relook at the portfolio and churn the sectors a bit, or do you think if you're a long-term investor, stick to the ones that have been doing well, whether it's PSUs, whether it's defense, whether it's financials?
Well, I think my view had been that for some time I've been mentioning this, that large cap, being in large cap makes more sense. If you really look at the valuation comfort and the comfort at such high valuation levels, large cap does provide that. And there are enough and more opportunities, interesting opportunities in large cap. So from a long-term investor's point of view, some of the large cap frontline stocks do offer a good opportunity to buy even now at these levels.
Right, okay, that's the take coming in on what banks are likely to do. But, Kunal, just wanted to get a sense from you. Other than banks, where is it that you're seeing sectoral leadership? And would it be IT now?
Well, yeah, I think IT has been playing its part over the last 2-3 months. We've seen large caps, mid cap IT names doing pretty well. Within the IT, I believe that the mid cap IT stocks, they can start to see some bit of breakout in terms of the beta for themselves. And also, I think the underperforming pack within the IT sector, underperforming stock within the IT pack is Wipro. That's on the larger cap front, which has been a huge underperformer, still stuck at I think 545, 550 odd mark. That stock can start to show some signs of outperformance. But I believe that the stronger part of the sentimental push could also be coming back if the metal stocks make a strong short covering move. So the ingredients over the last 3-4 days indicate that there has been few stocks which have shown signs of leadership. JSW Steel, Jindal Steel are the two ones which have done pretty well for themselves. SAIL as well as Tata Steel, even though these stocks have been huge underperformers in the metal pack, the data still suggests that there's been short covering which has been going on since the last 2-3 trading sessions for these stocks. So I think it's about these stocks to try and get back maybe one more leg of short covering that could probably propel these stocks into a breakout mode, and potentially this stock can also get back into the line of covering up the underperformance with respect to the overall market sentiment along with the Bank Nifty.
Okay, so metal is another space to look at apart from the banking index. But I'm looking at the week-to-date moves, and FMCG has been a top performer with a 3% move this week. Varun Beverages, for instance, for the week is up 8-9%. Britannia has done quite well. That's up 5% this week. United Spirits is another one. Aditya, if I had to ask you your top recommendations within the FMCG pack, what would be the names that come to mind?
I like Varun Beverages. The stock is consolidating since a while and it's breaking out, whereas other peers like Britannia and Dabur, other peers are correcting today. This stock has done pretty well, bounced back from levels of 550 to 646 in last 3 days. So I think institutions are aggressively buying into this counter and accumulating it slowly. So it's a buy at 647. 590 is the stop loss. and 700 to 730 is the target. I like Varun Beverage, and second one is Hindustan Unilever. This is a classical large cap, one of the best stock in large cap space in FMCG basket. So that's a buy at 2931. Stop loss is 2750, and target is 3150 to 3250.
Right. Okay. That's the take coming in on some of the individual names which are looking interesting. Other than that, also want to focus on, some of the newsmakers today, and just want to highlight there was, of course, a massive upgrade coming in on Zomato earlier this morning. So let's just bring up that stock and show you how it's currently panning out in trade, because the House of Bernstein maintains their outperform, and they've now upped the target price all the way to 330. Although today the stock, it started off with a green tick, and now it's trailing around that 270 odd level. They're saying they continue to really break all stereotypes, and a whole host of reasons why they continue to like this particular stock. Other than that, of course, there's been Tata Power as well, which has been in focus this morning. There's also, BPCL, wherein the management has now approved entering into a JV agreement with Sembcorp Green Hydrogen India, which is in the domain of renewable energy as well as green hydrogen. So that's the other stock which is also in focus. And the note from HSBC on hospitals is quite interesting. Sudeep, wanted to get your thoughts in on where within healthcare do you still find opportunity to invest afresh?
Well, I think you just mentioned hospitals. I think that's one space which provides significant opportunities. There has been a lot of activity in this hospital space over the last couple of years. There has been a lot of M&A. Consolidation is definitely happening, and that is making the large players even stronger and with even larger presence across the country. So I like some of these, hospital companies. Apollo continues to remain an attractive proposition for a long-term investor. The valuation is not cheap, and the margin of error is very limited. But if you are a long-term investor, you have 1 to 3 year time horizon, I think Apollo does look good. Medanta also can be looked at. They are expanding their presence into other parts of northern India. And with that expansion, I think they'll be in a very good position. So that's the second one. Max is also looking good for a long-term investor's point of view. There again, a lot of interesting things are happening. Expansion, the number of beds are expanding. So the overall scenario is improving. Remember, during the COVID and post-COVID, the travel restrictions kind of limited the international patient intake, but that's again back on full swing, and international patients bring incremental and a higher margin business. So I think with that coming back in full swing is helping all these players in a big way.
Okay, so Max, Medanta, Apollo Hospitals still look quite strong right now. That's the word coming in, despite some of those stocks being available at expensive valuations. But time now to take the BTST trades from our chartist. Kunal, you go first with the buy today, sell tomorrow, and tomorrow being Monday, thankfully now.
Yeah, so in that anticipation would suggest to buy calls. PVR Inox is the first stock which I would suggest as a buy. Clear signs of a breakout about the 1650 plus mark. So buy with a target of 1700. Stop loss could be kept at 1600 levels. And ICICI Bank is something which I've been bullish on. Continue to be bullish on the stock with a target of 1280. Stop loss could be now kept at 1215.
Okay, and Aditya, what about your BTST trades?
I like Moti Sense. Jewelry stocks have been doing well, and the kind of run which we have seen across the board in all the stocks. I think Moti Sense, being an IPO stock, is pretty volatile and high beta counter. Next week could also be positive for this stock. So this is a buy at 269. Stop loss is 245, and target is 275 to 290.
Okay, those are some interesting names. Actually, some of those gold-related themes have been doing very well today. Gold, of course, at an all-time high. And you've got both Manappuram as well as Muthoot as well springing up quite nicely. Where are the crude beneficiaries? You did see that sporadic move actually play out all through this week, be it in paints, OMCs. They began the week very well. Now, of course, it's a much more sedate move we are seeing. Even tires, for that matter, held out smartly. Sudeep, is that a theme to really play, the crude beneficiaries? Or do you think you'll wait for more meaningful or more sustainable signs of a crude decline?
Well, I'll definitely wait for more sustainable signs before I decide to play the crude derivative beneficiaries. There are other reasons as well. Look at paints. Earlier, we used to play paints whenever crude prices used to go up or down. But now the paint industry itself is witnessing whole lot of changing scenarios with competition intensifying, with Birla Opus coming in. And the traditional beneficiaries of food prices going down, being Asian Paints, I think I will be a little careful in buying Asian Paints. A couple of reasons. One is they being the industry leader, Birla Opus entry will definitely hurt them in terms of market share. It's bound to happen. Whatever market share Birla Opus gathers, part of it will go from Asian Paints. Second, one has to remember that the benefit of crude oil prices coming down comes with a quarter's lag. So it's not going to happen immediately. So we'll have to wait and watch. I don't think we should, quickly get into that. If somebody has to play the crude prices falling down, rather one can look at the oil marketing companies. At some level, they will benefit. I'm not asking anybody to buy into those because there are important state elections looming, and state election is definitely a time for government to look at oil price reduction. So I think that can affect the performance and the margins again. So we'll have to wait and watch, but the direct beneficiaries will be BPCL, HPCL and others.
Okay, point taken. So that's a view on some of these OMCs as well, and how some of the commodity-based, companies have been doing. Because of course, while crude has been soft, it's gold which has been glittering away. Talking about glittering gold, let me take it across to Shesha to get a better sense as to what's really led to this move and what our brokerage is talking about the way forward.
Well, absolutely. Look at the kind of run-up that we have seen in gold. Gold prices have risen nearly 2% overnight. Gold prices are up nearly 2.5 to 3% on a month-to-date basis, and on a year-to-date basis, gold has risen a whopping 25%. Some of the main reasons include weakening dollar and hopes of interest rate cut. Remember, there's that important Federal Reserve meet on the 17th and 18th of September. There are hopes of interest rate cut of about 25 basis points. European Central Bank also yesterday cut interest rates for the second time this year. So there are several reasons driving the surge in gold prices. Apart from that, strong buying by central banks globally is also one of the reasons why gold prices continue to surge. Now, Goldman Sachs has come out with a report where they believe that despite the run-up that we have seen, gold prices will continue to surge and could touch $2,700 per ounce by early next year. In fact, it is one of their preferred long bets, and they also said that gold is their preferred bet and hedge against inflation, especially given the economic uncertainties that we are facing globally. So yes, a kind of run-up that we have seen is expected to continue, and analysts believe that gold prices could touch nearly $2,000 per ounce by early next year.
And Kunal, what's your view on gold and crude? Because you earlier hinted that crude will be falling below the mark of $70. It did happen, but it's recovered now. What about gold and crude from here on?
So, both the asset classes have gone into a negative correlation. So, earlier we used to see the trends that crude oil prices move up higher. Gold also tends to, move up in a very similar kind of a price trajectory. But we've seen that over the last 2 years, specifically from 2022 mid somewhere, is where both these asset classes have started to trend in a negative direction. I would probably believe that the trend would continue this time around for both these asset classes. So, which means that potentially crude could cool off on a very gradual note. Gold, what we are seeing is on the dollar terms, especially, I think has given a big breakout. In rupee terms, you have to try and adjust that 9% cut which happened for rupee prices on gold. So I think relatively we have almost come back from that 74,200 levels back to that 73,200 mark for the rupee. But I believe on dollar terms is where we've seen a very big breakout for gold prices. My sense is that we should be looking at least another 80 to 100 point jump on dollar prices for gold, which means potentially 2650 to 2700 could be a potential target range for gold on dollar denominated rates.
Okay, that's the take coming in on gold as well as crude. In the meantime, it's IT continuing to hold out. Piramal Enterprises making quite a decent move. PVR Inox looking good. And then Bandhan Bank as well holding out by about 5.5% as we highlighted earlier. Actually, it's not been the best of weeks for some of these gas stocks. So MGL, IGL, I think over the week would have taken quite a bit of fall there. But Sudip also wanted to understand, given that the markets are back to their all-time high, and there is that sectoral rotation which is at play, IT, FMCG, pharma, and now even banks making a comeback. What is it that you would avoid and also recommend maybe profit taking from?
Well, I think one sector, particularly one area where I'm a little scared, even now after a bit of correction, has been some of these PSU defense as well as PSU railway stocks. My recommendation to the investors have been to book profit and stay away from fresh buying in these counters. These are good companies with good order book position and they're gaining fresh orders as well. But the valuation is such that, time correction is bound to happen if not anything else. The order gaining doesn't translate into profit and loss immediately. It takes 3, 4, 5 years for these companies. So my recommendation is to avoid this at this stage. The margin of error is very, very limited here. And some of these companies haven't been operationally also doing well. I can talk about BHEL, I can talk about some of the RVNL, and their operational performance also hasn't been up to the mark. So under the circumstances, I think it's better to book profit and stay away from these counters and look at sharp correction, if at all, whenever there is, and look at fresh buying only then, not before that.
Okay, since we're on the subject of what's really going to happen with PSEs, let's get an ET Now exclusive. And the public sector enterprises are in the spotlight once again on the back of Centre's efforts to come up with a nuanced upgradation mechanism. We learned from sources that the new mechanism in the works may even allow the Centre to downgrade enterprises. Let's try and understand what exactly is in the works. Prakash is here with more details.
Yes, an important development coming in as we are learning from our sources that the government is planning a new mechanism for status upgradation of central public sector enterprises. A very significant development coming in. As we are given to understand that the Department of Public Enterprises has begun discussion on the new mechanism where all the financial aspects of the CPSEs will be taken into consideration. A new mechanism is being developed to ensure greater accountability where government wants CPSEs to continue performing according to defined parameters if upgraded from Mini Ratna to Noratna or Noratna to Maharatna. But the most significant aspect of this proposal is that the government is likely to include provisions to downgrading CPSE status if they fail to meet the defined parameters. A very significant development of this proposal. Along with that, the government also believes the new mechanism will foster sense of accountability within the CPSEs. However, we are also given to understand that the discussion is at very initial stage and the final decision will be taken after due consultation. As you are aware that the Department of Public Enterprises has recently granted Noratna status to 4 CPSEs like SJVN, NHPC, SECI and Railtel Corporation and also considering status upgradation for HAL as well.
Okay, point taken. So that's about the CPSC upgradation that is expected. But just taking stock of some of the big buzzers in the week gone by, Jubilant Life has had a up move of over 20%. Century Textiles did well. Prism Johnson, despite having those flip-flop kind of days, managed to end the week with a gain of almost 16-17%. Campus Activewear has been one of the surprising ones. Didn't really take notice apart from the fact that today there was an up move on the counter. But for the week, it's managed to report good gains. Denmark Life is the other one with 13% gain. On the losing side, just looking at the losers, Granules of course had to make to that list with that kind of slide that we saw yesterday. PFC is the other one which is down 9% in the week gone by itself. Honasa too came under pressure on account of that block deal that happened. And Raymond is down. In fact, Raymond has been a bit of flip-flop since the time the arm has got listed. But Aditya, specifically on PFC, REC, both are making it to the list of top losers this week, down 7 to 9% for the week. Is this dip a buying opportunity on PFC and REC?
Look, the stock has been correcting significantly, as you rightly said. This week was a big, drawdown for the stock. The drawdown should continue because the stock is now, just edging below its important moving average. Next support on the moving average is coming at 450. So, more 5 to 15% slide is possible in this counter, and the clear-cut underperformance and relative underperformance is pointing that institutions are clearly bearish on this counter. And if you look at the option activity also, that is also bearish. And disclaimer at the last, we have suggested short positions to our clients in PFC. So I remain bearish on this counter.
Okay. That's about PFC, REC, a bit bearish on that. But let me talk about the big events which are lined up for tomorrow, or rather for the next week, because there's just less than 4 minutes left for this week to end. US Fed rate decision, of course, on September 17th, 18th, that will be the biggest talking point. So let's watch out for that. The consensus on the street is a 25 basis point cut, but if it is 50, part of the street will not be too surprised, though this could be a bit of a concern that perhaps Fed sees bigger slowdown in the economy and hence the bigger push coming in. Bajaj Housing Finance listing, that's the big one to watch out for come Monday. Whether it lists at a premium of 60, 70, 80, 90, whatever percent is something to watch out for. UK, Japan rate decisions are impending in the coming week. Also, there is that expectation that China can adjust the prime loan rates, and that was the reason, perhaps part of the reason as such, why yesterday the stock markets were excited, because China's slowdown has been a worrying factor. So if that does turn about, that will be interesting, and that data point will come up for you shortly. The China loan prime rates as well. Jammu and Kashmir, state will hold the first local government elections as well. So the elections, they start from September 18. It will go on till the month of October as well. But at least the first phase will start, and definitely very interesting, Aisha, from the kind of impact it will have on the local politics as well. That's the latest as far as the market is concerned and what we're expecting next week. But overall, the week hasn't been too jarring, right? We made fresh record highs this week for what it's worth, and ending above the 25,300 mark quite solidly.
Oh yeah, absolutely. I mean, most days were a very, very, quiet and sedate start, and only then we did see the markets move the way they did. And of course, Thursday is definitely going to be the shining day amidst the entire week.
If you like this video, then like, share and subscribe to ET Now.